Today, folks, we are talking about higher inflation, higher interest rates for longer, a tariff war that we are barreling toward, causing extreme fear in the market as leveraged tech investors start selling off, which is great to the upside, but horrible to the downside, opening up some buying opportunities, in my opinion. The best thing you can possibly see is earnings going up and stock prices coming down, but that doesn't stop the economic uncertainty that we're barreling toward, and we got to review all of this as I've been investing over $10,000 this week, now that I finished up my taxes, and we'll talk about the stocks that I'm buying in my $370,000 Canadian stock portfolio. So if you are on a path to financial independence, if you want to join this journey with this financial clown, just go down there and hit that subscribe button, folks, because if I can admit that I'm a finfluencer clown on the internet, this guy should be able to admit that he is a political clown, a presidential clown, because we're still facing these tariff wars that we thought were purely border related, but who really knows at this point. But Trump says 25% tariffs on most Canadian goods will take effect as of March 4th, and one of those things in his crosshair seems to be aluminum, which the U.S. imports 60% of aluminum from Quebec, which means everything. Is it like aluminum's in almost everything, cars, you name it, so many I mean, it's all going to go up in price, right? And Trump seems to think the government or somehow the country pays for it, but we are the country, you guys are the country, and the lower and middle class are feeling the pain ever more as inflation starts barreling over 3%, which is why Jerome Powell said we're going to leave interest rates higher for longer, though Trump said, hey, we're going to do tariff war and lower rates, which doesn't make any godly sense because one's inflationary and the other one is also inflationary. It has like two inflationary impacts at once if you lower rates and do tariffs. But nonetheless, if you go back to 2018 and 2019, you can do a direct one-to-one relation. When they started seeing some higher inflation in 2018, when it was kind of up toward 2.9%. Toward that period, we started seeing in 2018, they were raising the interest rates. And once those interest rates peaked at 2.5% in 2019, they started to lower them before the pandemic, right? Lowering them back to about 1.75% as of October 30th, 2019. And if you follow October 30th of 2019, the one-to-one correlation, as soon as money became spendable again, boom, inflation picks back up because people want to invest in their businesses, buy cool things, cars, whatever. When interest rates are cheap, it's easy to borrow. But then the pandemic hit, and we all kind of knew what followed there after. But this is all directly hindering the Canadian dollar and a lot of foreign currencies as people speculate on exactly like what's going to happen with short-term policy. And the Canadian dollar is down like 1.5 percentage points just in the last week, which hurt quite a lot as somebody that's continuing to convert currency to buy U.S. assets and businesses that I personally believe in, regardless of the short-term circumstance and speculation that goes on. But what's really intriguing is year to date and on the 1 year, the Canadian markets continue to actually outperform the S&P 500, which is quite interesting. On the 1 year, the S&P is only up 16%. The TSX is actually up 18%, excluding the 3% yield that most of the Canadian indexes usually pay over the 1% you get out of the S&P. But even year to date, right, the TSX is actually doing better than the U.S. markets, which is quite perplexing on the back of all of this fear. So what am I doing? Like I said, I'm buying, baby. I mean, we're in a good market environment right now, and I'm starting to realize why I have my portfolio set up the way I have it. I did invest a lot more as I continue to build out my take to bet. It's one of the shortest term speculations and one of the largest bets I have ever made in my portfolio, but I'm in a different position, you know, a decade later of investing and owning a piece of real estate, and the wife has investments that I can actually make these decisions comfortably without it directly hindering, because even if the stock tanks 50%, it is still a minor position in our total assets combined, right? But right now I got about 9.1 of take two. We'll talk about that in a moment, but I want to talk about the stabilizers and why VDY and SCHD are in my portfolio, because these are considered assets people will run to in periods of extreme volatility or periods of fear in the market, because these are more foundational, traditional companies that aren't as volatile during periods of sell-offs like we're experiencing now. In fact, SCHD is up 3.85%. And yes, I'm owning this not because it's going to outperform like the Qs or the S&P, but I'm owning it because if I have experienced job volatility, if the market goes through extreme periods of volatility, it generates cash flow for me that I can use without actually having to sell the equity in the stock that I can either reinvest or use for personal expenditures. And VDY not doing as well, and I'm still expecting that, you know, tariff concerns can hinder this a bit. It's limited exposure, but between these two ETFs, I mean, just in my account, you can see that it makes up almost just as half as much as the S&P makes up. And I'm very comfortable with that, though I'd rather be a little bit more leveraged in VOO for the growth. But this is a nice, healthy balance on the back of this volatile market. Telus, surprisingly, a company that I'm very comfortable holding right now after getting through earnings, has been one of the best performing Canadian stocks. I should pick up a bit more shares. We did get in at a good price of $21.50, but I think I should pick up a little bit more because I think these are the kind of Canadian companies that will be unaffected by tariffs because they're directly to consumer businesses. They're not over border traded. and they have highly stable revenues because nobody's going to give up on their internet or their phone bill. Now, before we talk about Google, some of the tech companies and the volatility from earnings this week, Take-Two Interactive, I've talked about this relentlessly. I've been arguing with people day and night. I have talked to so many friends, and this is just the story that's been on the forefront of my mind. How big is Grand Theft Auto going to be on its release? And I still believe that it's going to generate somewhere between 50 to 100 million sales in the first month. I think it's going to generate somewhere between 5 and 10 billion just on that game. I think the company will generate somewhere between 10 and 15 billion in revenue this year, which is largely 2 to 3x what they're currently guiding for, and that this stock has the potential to run up to a $500 price target here, or somewhere between a $60 and $100 billion market cap. And I don't want to take this speculation knowing what I think I'm aware of and what my gut is telling me, and not place a sizable bet to hopefully turn it into a six-figure position, because right now I've got about $34,000 of it. I told you guys I want it to be about a 30 to 50K position, but right now I'm just going to wait, see if it pulls back. I have an average buy of around $211. It's got mostly institutional ownership, so it's not moving all that much. Google is another stock that I should be buying right now, but we do own quite a bit of it. I wouldn't mind picking up some shares on the dip as soon as I get a bit more capital to invest in my tax-free savings account. After taxes, I had some extra capital that I could contribute to my RRSP, and that's where that money went, and then I put it into Take-Two. But I do own Google, my TFSA, and I wouldn't mind picking up a few more shares because it is insanely cheap here at a 21 price to earnings multiple. If you guys were looking for an opportunity to get in, this is your opportunity. Our average buy is around 180, but this is a long-term hold for us, and I'm shocked that this company continues to trade at a $2 trillion valuation. Again, I want you to keep in mind a company like Nvidia is currently trading at a $3 trillion valuation at a 41 price to earnings, and I'll tell you, even Nvidia is looking pretty cheap right now. The fact that it posted earnings that continue to boggle my mind. I mean, their revenue was up 12% quarter over quarter, not year over year, and their net income maintained up 14% quarter over quarter to $22 billion. I'm just like floored by this, considering in Q4 of 2024 it was 12 billion, and that growth rate is starting to slow down a little bit, because you can see from Q1 that growth rate quarter over quarter was 21%. So they're losing the acceleration due to the scale of large numbers, but you still have to recognize that the company's generating 22 billion of net income. Google's generating about 26 billion. It's getting pretty close to generating the same revenue or net income that Google is, which is insane, but it's still got a little ways to go, right? But I still think Google, I can't get over that Google's not a $3 or $4 trillion company. I don't know how it's trading down where it is, and I would gladly buy more here along with Meta. They are fairly sizable positions, so I don't really want to buy a whole lot more. I'm pretty comfortable with where the position's at. But yeah, I mean, you got to recognize what's going on here, right? So in the totality of the portfolio, my short-term play and what I'm doing here is Take-Two is not going to be a long-term hold. There's no way that this is going to be in my account for the next 5 years like Google and Meta will be. I'm going to be selling this probably toward the end of the year, or at least probably heading into the fourth quarter earnings, when people are speculating on how much money this media is going to produce from GTA 6. And then I'll probably pivot that into VT or XEQT. Right now, global indexes are doing far superior to basically the US markets and a lot of these particular markets. Actually, if you just take a look at something like VT as an example, that kind of encompasses all those stocks like Alibaba and many of the other companies that people have been neglecting in foreign markets. I mean, VT's up 2.18%. XEQT is probably doing just as well, I would imagine. It's up about 2.64%. I do want to start giving myself some generational, foundational companies that offer that preservation of my wealth, because right now that the wife and I have been in this growth phase where, we purchased a piece of real estate. We want to build our portfolios back to a sizable position through, mitigated risk with some individual companies, and they've yielded great results. I mean, Meta's done very well for the wife. Google's, I still think, going to perform exceptionally well here. If Take-Two, really accelerates the portfolio returns plus my contributions, I really want to take this into a $500,000 portfolio soon, and I want to start again diversifying it into global markets and keeping the dividend stocks, the S&P, VT, and keep our individual stocks limited until I find another investable opportunity that's out there. So I'm very excited to do that toward the end of this year, regardless if Take-Two works out or not. But I want to get to a place where the real estate that we own is going to be a focus of getting that paid off in the next 2 years, so we can sit in a place of true comfortability to be in our getting toward our mid-30s to have a paid-for mortgage and a portfolio at the scale that we do. I think would be something that I've worked so hard toward on my financial independence journey, and have been so frugal for the last decade to get into this position. And there's still a lot of opportunity out there. I still think if you guys are looking at the Canadian economies, whatever you're looking at, I think this is the opportunity when earnings are going up and stock prices are going down. We saw that with the bank earnings this week. If you're into tech companies, I'd love to know what tech companies you're buying. I mean, Tesla had a huge sell-off, though I couldn't bring myself to stomach the volatility of that company with how it's currently being operated, especially with the concerns over sales. Not that auto seems to matter for anybody. Palantir down back into the 80s, the low 80s. Aduro looked like it's another buying opportunity here. I've been debating on picking up a few shares if it gets below $5. Again, it is trading down nicely here. But yeah, most stocks right now are trading down, and I'm very, very excited to see, because again, you got to recognize this is a correctional period. I do not think it's a crash unless policy changes. Policy could send us into a spiraling market where there's going to be more extreme fear and concern. And I desperately need to go get a haircut here, folks. So stay cool, stay awesome. And as always, I look forward to catching you in the next one.